So to date, we've helped well over 1,000 startups sell, and then total deal volume, well over 500 million. Last month we did 82 acquisitions with total acquisition volume of, I believe, 25 million. Month prior was 92 acquisitions with 35 million in deal volume. And those deals really range. And
Yeah.
so we still have kind of the microacquired DNA, but we're starting to move up towards the $1 to $5 million, $1 to $10 million acquisitions.
Hmm.
So when you ask like the average acquisition, it's difficult to give a concise answer because we'll help startups sell for, and this is kind of my one of my favorite sides of the business, like a small product, few customers, made by someone in, another country where $50,000 can go a long ways. So we see a lot of those. And then we also help facilitate larger acquisitions, which would be, seven, sometimes low eight figures.
Yeah. And you used to be called Micro Acquire. Is that right? Micro
Yeah,
Acquire.
micro
Yeah.
acquire.
And it started off, what was the inspiration for that has stayed with you into acquire.com?
Yeah, so I had kind of a what's called like a thesis or a bet. I always say, I don't always say it all the time, but a thought process. So when I think of new ideas, I try to, because market timing is the biggest factor in startup success. There's a really good TED talk if you haven't seen it. But I made a bet that there's going to be a trend of entrepreneurship through acquisition. And then also there's going to be more entrepreneurs bootstrapping their businesses and not raising venture capital. So not building, the $1 billion companies, but there's this big long tail of startup software companies that are making 20K a year, 500,000 a year, a million a year, 10 million a year. And I thought that trend was gonna be interesting to watch. And then I started thinking, okay, how are these companies gonna get acquired? And so I figured there needed to be a marketplace for just the startup ecosystem. And it was kind of something I wanted.
Yeah.
Because previously I had bootstrapped a company. I had no idea how acquisitions worked and didn't know what private equity was. I see a lot of books on your bookshelves, but I don't think there's probably one on acquisitions. So there's books on marketing, sales, everything, fundraising, but very little education around the actual acquisition process, which is arguably the most important part of the founder's journey, in my opinion. And so I thought there was a big opportunity to kind of bring buyers and sellers into one place and make stages of the acquisition process more transparent, easier to understand. So that
Yeah.
was kind of the bet I made, was there's going to be a lot of, smaller startups being built rather than, and this is just based off stats too. Like I think it's you have like a 0.1% chance of building a, multi-billion-dollar business. But
Hmm.
then what happens to the other 99.9%? And that's kind of our target market, I guess you could say.
And I talk about this all the time. It's a major part. My new book, Your First Million, which is behind me, talks about this. 50% or more of the book is about this not not needing or wanting or pursuing venture capital in any way, shape, or form, and it being about bootstrapping, it being about like life-changing amounts. If someone sold their company that they built for 2 to 5 years for $1 million, that's life-changing, and they can do so much more with that. And someone who does that and just continues to do that, I think it's also a really interesting type of founder. And I would say that Lost and Founder by Rand Fishkin is a great book if you want to learn about all the stuff. So going back to it, so you kind of just said it quickly and then moved on. You've helped 1,000 companies get acquired. And what time period?
So we launched in June 2020. So
Three years?
4 years. Yeah.
No, 3 years. 3 years and 3 months. And I will say that I'm a small angel investor in acquire.com, and I'm very happy to be. I have to say that. That is
And I'm
so,
very appreciative.
yeah, it's cool. I mean, it's just fun to watch you. I think honestly, and this is for those who are potential investors, people who are aspiring investors, being an angel investor, acquire.com is a wonderful example of how being an angel investor is like paying for just great education above all else, because and just having that, like being able to peer into your process. You take your investors through your updates, through so much of it. It's so interesting, and it's a masterclass in itself. So another great reason to be an angel investor, everyone listening and watching, is to have access to like the behind the scenes. How does the thing happen? How does it get made? um
Do you want to
so
know? I wanna
okay,
go back on 2 points. Is that
let's
okay?
do, yes, of course.
So the investor updates, you know how I make them like really detailed and I'll kind of point out things that, we need to fix.
Yes.
So I'll purposely do that and then I share with my entire team. So I
Mm.
highlight basically these are the main things. I always say over communicate your strategy with your team. And I think it's really powerful when you say, this is what went out to all of our investors and this is what we need to fix. And
Mm.
so that's been helpful in terms of alignment. But going back to your first point in terms of um, in terms of how to think about success in Silicon Valley,
Mhm. But
I think a
you
lot.
live in Silicon Valley, but you're not part of it, it sounds like.
So if I'm being honest, I moved here. I married a beautiful Italian girl, and she grew up in Foster City. And
Yeah.
if you marry into an Italian family, it's a requirement to live by her family. So her parents live down the street, her grandparents live down the street. We're gonna see them all this week. So it's beautiful being a part of an Italian. If it was up to me though, I grew up in San Clemente and I
Hmm.
love the beach that's in between LA and San Diego. But going back to your first point, I think a lot of people don't understand, bootstrapping a business or raising a little bit of funding, however you get there, and you exit and your outcome is just a couple $1 million,
Mm.
that will most definitely change your life. And I think a lot of people are drawn to these extreme outcomes because that's generally what you hear about. If you sell a business for $5 million, the Wall Street Journal is not going to write about you. But
Yeah.
like there's that path of entrepreneurship that I think, um, I like to kind of shine a light on a little bit more. I call it more practical and more realistic approach to entrepreneurship. So
Yeah.
totally agree with you.
To your point, more people are doing this or have this path ahead of them than the other that we see so much of kind of in our faces. And it's great to have aspirations for things because different people are going to have a different vibe, right? Some people are going to want to go for the $1 billion plus company, for the IPO, for the ringing the bell, right? But a lot of people, and this is a lot of people that we invest in too, I think like there is a way for the outcome to benefit everyone, even if it's not this $1 billion outcome. So that's why acquire.com is so interesting to me. I want to talk about two things before we go. I want to make sure that we talk about how someone onboards to acquire.com and that what that process looks like. But before we do that, I want to understand, this is your first million, the podcast. I want to understand, how did you make your first million?
How did I make my first million? So prior to Acquire, I started a company so I didn't have any money for a long time. And I still don't have a lot of money. But I started a company called Business Apps, and it was a do-yourself drag and drop mobile app builder. It was right when the iPhone came out. I was in
Mm.
college. I kind of just got lucky. I'm not technical. I didn't have any prior experience in sales, marketing, really anything. I just had this kind of dream of building a startup and seeing if I could make it work. And it just took off and sold that business to a private equity firm when I was 29, right when we hit about 10 million in annual recurring revenue.
Mm. And so building that up to 10 million in annual recurring revenue, How long did it take you to go from scratch? You said you were in college and then you were 29 or so. So how many years would you say it took you to get to that point?
8 years. We got to our first million maybe in the first year. It exploded like a bomb.
Mm.
Maybe that's not the best sort of analogy. But
Fireworks. Yeah,
yeah,
yeah.
fireworks. Caught lightning in a bottle is probably a better analogy. But it was a time when and I had all these and again, this is where I go back to what I said previously, was making a bet that's obvious to you that will become obvious to others in the future. And so I was in a college town and I saw everybody with iPhones. So early adopters, usually the younger crowd. I didn't have an iPhone, I couldn't afford it. But I saw this opportunity to build mobile apps for businesses in my college town that would want to send push notes. It's happy hour, or a local restaurant. We're going to give a discount tonight or something like that. Because their core demographic had this phone, but no one knew how to build iPhone apps. And so I made a really simple way to just make it faster, easier, more affordable for small businesses. Because the other route was custom development, and that took months. It cost, right when the iPhone came out, there were a lot of iPhone developers. So to develop even a simple iPhone app, it was like 100K. And so we were able to just build a template and then just kind of reskin it and resell it.
So then when you sold the company at 29, you became a millionaire in that transaction, your personal first million, because we talk a lot about the difference between your company making a million and you personally being a millionaire. Just to be very clear to people that the people walking around who are generating revenue doesn't mean that they're balling.
Yeah.
Yeah. So
Do you
is that an affirmative? Yes, you did.
Yeah, I've actually never shared the exact price. I promised my wife I wouldn't.
Mhm.
But I can share deal terms if that's like
Yeah. Share
interesting.
what you'd like to share.
So I sold the business because I was just getting tired in the company. Like I was, again, it was kind of like the only thing I had known.
Mm.
And I've written a book about it if anyone wants to hear the story. It's called Just Getting Inquired. You can find it on Amazon. And I haven't made like $1 off the book. It was such a weird experience because I was young and managing just all these people and I didn't know what I was doing. And I made a ton of mistakes. So you could probably learn how to not make those mistakes. But so the deal structure was we did a stock purchase. We had 2 million cash on hand from just profits that we were keeping for a rainy day. We added that onto the purchase price at a 1x multiple. Um, Transition was 90 days, and then I was out of the business. And then I actually got a $500,000 blank check on top of that I gave to my team.
Mm. And how many people were in your team approximately?
We had around 30 in house, but then we had like 40 outsourced and like engineers, people. We had 24/7 customer support. So we had people in, South America, France, Australia. So a lot of, I would say over half the business was contractors.
Mm-hmm. Mm-hmm. And so you said it was a stock purchase and you had some cash pieces to it. Is just for I'm not trying to get into your business so much, but just for people who are thinking this through, even if they want to sell their company on acquire.com, in general, how long are those earnouts or anything like that when it comes to like getting stock or getting an earnout? Is there like a average number, or is it just so different for every single case?
It's different for every single case, but the majority of the acquisitions that we see will have some component of seller financing is typically the most common, or some sort of earnout component or a conditional holdback. It really depends on the size of the transaction. As the transaction gets bigger, usually there's more, um, holdbacks, seller financing, that sort of stuff. And that's really just to de-risk the acquisition for the buyer in case they buy it and then whoever owns the business, all the knowledge is instantly gone. But we do see also a lot of all cash upfront transactions. That's, kind of the That's what every founder wants. No one, no, I
Yeah.
don't think a lot of entrepreneurs want, I sold my business and then I get a job for 4 years and then I
Yeah.
gotta rest invest, as they say.
Yeah.
I didn't want that. So we see kind of everything that you could think of, but the majority of deals do have some sort of, I would say off the top of my head, between 60 to 70% of the acquisitions that we facilitate have some form of seller financing,
Mhm.
which, just for people that don't know what seller financing means, an example would be, okay, I'm going to acquire your company for $2 million. 1.5 million is going to be cash on close. And so there's a remaining 500,000, and then that's going to be paid monthly over the course of, say, 2 years or something like that. And that's an incentive to keep the original owner of the business available in case there's, a bug that, the new engineering team can't figure out, or if there's a customer with a unique discount plan or something like that. Just that knowledge that the original owner has, so it doesn't just, you know,
Yeah, you hand it over. Yeah. And that's, I mean, you talk about the like becoming someone's employee for 4 years. Stuart Butterfield, I think twice has done this where he's been acquired, his company, first by Yahoo and then by Salesforce. And the first time he really let him have it when he was there for a few months or a couple of years. And he's like, I'm out of here. This is not for me. Started Slack and then sold that and then stayed around for quite a long time, but then had to leave, because it was just like that. When you're an entrepreneur, a lot of times you have like you take a little bit of a break, but you kind of have to do the next thing. It's just in your blood. So this is a really interesting. I love what acquire.com could mean for so many of the listeners of this podcast. And so I do want to take them through the process. So first of all, you mentioned earlier that it's SaaS companies. Is that's the majority of the types of companies that work best on acquire.com?
yeah. So 50% of the acquisitions that we facilitate are SaaS, but we work with a lot of e-commerce, mobile app companies, agencies, generally any type of profitable online business. So
Mm,
sometimes we'll see cool like newsletters. We'll see, recently I saw a really profitable Twitter meme account. It
wow.
and they were doing like 1.7 million in revenue, and like all of it was profit essentially. I think the margin was like 85%. So we see a lot of interesting businesses, and those are also good acquisitions for other companies to buy media properties.
Yes.
So generally, just kind of to round it out, any sort of online business is a good fit.
Mhm. And what kind of acquirers are there? Because people too will be listening to this and saying, hey, because you said it earlier quickly, it's about like a type of entrepreneurship is to buy a current company and create something out of that, either to flip or to take it to, its full potential. What sort of acquirers are you also seeing on the platform?
Yeah, we see again, kind of. So we have 300,000 buyers
Yeah.
registered. So out of that, I would say probably 25% are private equity. Um, I'm not going to get to a full 100%. I'm bad at off the top of my head math.
Yeah. All good.
A lot of public companies, VC-backed companies, even just really profitable bootstrap companies. But then we also do see a lot of individual buyers, and
Mm.
these would be entrepreneurs that maybe have some liquidity event, whether working at a large company or they've built and sold another company. And what they're really doing is they're looking to buy product market fit, because when you first start a company, you gotta kind of chew glass and figure out, scrape and claw to get your first customers. And so when you acquire a business, you kind of skip that stage. And so I see a lot of second time entrepreneurs acquiring pretty good businesses, just to skip that stage and then focus on what they're really good at, which might be go to market or expansion into different markets, whatever it may be.
How does someone become one of the 82 in the month that get acquired? What's something that stands out to you where it's like, oh, they had a better chance? Or I know you're collecting data. There has to be a ton of data that you can look at. What do you see is really something?
It starts at the top, having a good business. Like it's so hard to sell a bad business. So, but moving down to, let's say, the mechanics of it, one, realistic valuation. So if you price your company too high, buyers are going to think that gap is just it's too big to close, and it's not worth a conversation. So realistic valuations, which we provide. Also being prepared. So having a document that goes over kind of the nuts and bolts of your business. We call it a due diligence checklist, just common questions that typically every buyer's asked. Um, Having a clean profit and loss statement so buyers can quickly understand the financial health of your business. Without those items, when you go live on Acquire, you definitely, first question from buyers are, hey, do you have a P&L? Hey, do you have the answers to these questions? So when you list on acquire.com, we help with all that. So we used to be a touchless marketplace where you would just kind of, enter in your information. We would do light due diligence, then you go live on the marketplace. And then this past year, what we've really done is, and this has been feedback from just sellers, because what we always want to do is put the founder first and really, again, help founders maximize their exits. And we built a team that helps you along every step of the way, whether that's creating your listing, understanding what to expect when you start speaking with buyers, how to prepare for an acquisition, and then when you go live on the marketplace, how to, control the process, how to create, some sort of FOMO with buyers. So there's multiple offers coming in all at the same time. So we built the product, and this is something that I did at Business Apps too, where our largest department was actually our customer success team. We had
Mm.
to, so I'm a big advocate of be the Zappos of your industry. So we built, an amazing product suite, and I'm obviously biased, but I think we built a great product suite that helps with, legal document creation, P&L creation. We have a seamless integration with escrow, so just making the whole acquisition process easier. But then on top of that, or below that, however you want to visualize this, we have a team of M&A advisors that can help you, whether you're selling a $10 million business or, $100,000 business.
Yeah, that's incredible. I know that there's a ton more I could ask you, so I wanted to do a part two. We have a couple of minutes left, and I want to ask you about your marketing, because that's like low key. It's high key because it's so effective, but it's low key such a brilliant part of what you do that I don't think you get enough credit for, because it's a whole other set of skills. How do you approach your marketing, and how you think about, I mean, from having the cameo videos to like going down to Twitter and trying to get Elon to give you the handle, like how do you think about that? Is it very natural, organic, or do you kind of strategize it out and plan it out?
Great question. It's very unscripted and planned. Again, it goes back to, I think the best strategies really with anything is it has to be fun. It's got to be fun. And if it's not fun, you're not going to be consistent. And if you're not consistent, it's not going to work. So when people read my tweets or me like going after like Elon, and I've known since December of last year, I have no chance at getting that handle. But people like root for it and they're like pre-acquire. So I'll just do it because I think it's funny.
Yeah.
And then maybe for people that don't know about prior marketing that I've done, but I used to get these cameos with Russ Hanneman from the show Silicon Valley. I thought they were hilarious, and so I would just post them. So there's not really like a strategic. We do have like a strategic marketing team that has KPIs that we're trying to hit and stuff like that. But for me personally, most of my tweets are just written. I just wake up and write something, and I think that's kind of when also the best content kind of comes out, when it's not forced, and then it's just fun. I used to journal a lot, and I used to kind of do it on Facebook. My family would be like, what the heck? um so I'll
Yeah.
just say kind of thoughts on my mind, and my goal is I have a brand voice written down, and I think it's just like Be yourself, humorous, helpful, motivating, inspiring. And that's kind of like what gets me going is if I can just send a tweet, one person might look at it as like, oh, that's super cheesy. But there's someone out there where they might read that and say, like, this inspired me or like this motivates me. And that's kind of what I like to do. That brings me energy.
That's awesome. Well, thank you so much for being on your first million. Like I said, we will do a part two because there's a lot more I want to talk to you about. But it's been wonderful talking to you. And people can go to acquire.com to be a buyer or a seller, or maybe both.
Yeah. Thanks for having me, Arlen. Appreciate you.